2026 could be the year the global banking system faces hidden dangers far bigger than inflation, interest rates, or typical market volatility. Most people glance at headlines and think banks are safe, stable, and well capitalized, but beneath the surface, silent threats are quietly growing. Today, we're diving deep into these hidden risks, the ones almost no mainstream outlet talks about, and uncovering how they could impact your savings, investments, and the stability of the entire financial system. Stick with me, because by the end of this video, you'll see the single biggest risk that even Wall Street insiders are quietly monitoring. At first glance, the banking sector seems healthy. Banks are profitable, liquidity appears strong, and regulatory oversight is solid. Yet, according to Deloitte's 2026 Banking Outlook, the industry is navigating a complex web of challenges that could expose weaknesses in unexpected ways. Geopolitical tensions, rapid AI adoption, cyber threats, credit stresses, and regulatory mismatches are converging to create a high-risk environment. The key thing to understand is that this risk doesn't show up on balance sheets immediately. It builds quietly, like an undercurrent beneath a calm sea. Investors and everyday people alike must recognize these subtle pressures before they escalate. One of the most overlooked risks in 2026 comes from global geopolitics. Trade wars, sanctions, and rising tensions between major economies such as the US, China, and Europe are quietly shaping the banking landscape. Cross-border funding can become unreliable in seconds, and financial networks that appear stable may suddenly face disruption. Banks heavily exposed to international markets are particularly vulnerable. This risk is rarely discussed, but its implications are massive. Payments can freeze, liquidity can vanish, and market confidence can evaporate faster than anyone anticipates. In short, the financial world is more interconnected and more fragile than it looks. Cyber risk has never been higher. As banks increasingly rely on advanced technology and AI-driven systems, the sophistication of cyber attacks is growing exponentially. Hackers can now use AI to bypass traditional defenses, exploit vulnerabilities in real time, and launch attacks on a scale unimaginable just a few years ago. Fraud that once took weeks now happens in milliseconds. Banks may appear secure on the surface, but AI-powered attacks and deepfake identity theft are emerging as the most critical threats. 2026 could see attacks that are faster, smarter, and more damaging than ever before, and regulators are racing to catch up. Another hidden danger is loan quality. While headline profits look strong, certain sectors, particularly commercial real estate and small business loans, are showing early signs of stress. High interest rates, coupled with the maturity wall of debt coming due, could cause sudden refinancing difficulties. This is a silent threat. Banks may not announce problems immediately, but when defaults rise or collateral values fall, the impact could cascade through the financial system. What looks like stability on paper can hide deep vulnerabilities underneath, and savvy investors are already watching for early warning signs. Banks make money from the spread between lending rates and deposit costs, known as net interest margins (NIM). In 2026, NIMs are under pressure as funding costs rise faster than asset yields. Even healthy banks may face shrinking margins, which can quietly erode profitability over time. This is a subtle, almost invisible risk, but it can have massive consequences. A bank may appear solid while silently losing its competitive edge, and that hidden erosion of profit can trigger more significant market vulnerabilities down the line. The adoption of AI in banking is a double-edged sword. While AI can automate processes, optimize trading, and improve customer experiences, it introduces operational risk. AI systems can misinterpret anomalies, make poor decisions, or even propagate errors at scale. Banks relying too heavily on AI could face unprecedented operational failures, and when multiple institutions depend on similar systems, a single AI malfunction could ripple across markets. The efficiency gains of AI come with a hidden cost, amplified systemic risk that the public rarely sees. Global banking is no longer homogeneous. Regulatory divergence between the US, Europe, and Asia creates an uneven landscape where banks operate under different rules. This fragmentation allows risk arbitrage, where institutions exploit regulatory gaps, but it also increases vulnerability. A crisis in one region can cascade through others, and inconsistent oversight makes it harder to contain shocks. Fragmentation is a hidden threat that may not appear in conventional market analysis but has the power to amplify systemic risk in ways most people don't understand. All these factors, cyber and AI threats, loan quality pressures, net interest margin compression, geopolitical tension, and regulatory fragmentation, converge to create a massive, interconnected systemic risk. It's not a single bank that's the problem, it's the entire network. One failure can trigger a chain reaction, spreading disruption globally. This silent, underlying risk is what makes 2026 particularly precarious, and it's exactly what mainstream headlines often overlook. In 2026, the banking sector faces unprecedented hidden risks. These These include sophisticated cyber threats, AI-driven operational risks, credit and margin pressures, geopolitical uncertainty, and regulatory fragmentation. While banks appear profitable and markets calm, these underlying risks are quietly growing and could have dramatic consequences for investors and everyday account holders alike. Awareness and proactive monitoring are critical. Understanding these threats allows you to prepare, protect your assets, and avoid being caught off guard by sudden disruptions. Remember, risk doesn't announce itself before it hits. The more you understand these hidden threats, the more prepared you'll be to navigate the turbulent financial waters of 2026. Hit like if you found these insights useful, comment below on which risk concerns you the most, and subscribe with notifications on. The next major financial shock is closer than you think. Don't get left behind.